What's going on, dividend chasers? Dividend Bloodhound here with another investing episode. In this episode we're going to conduct August's Trading 212 portfolio review. We're going to have a look at my buys, my sells, what I've got rid of, what I'm considering buying more of if there is a drop in the market, or some of them have already dropped. To be fair, I'll go into that a little bit more later on in the video. And then we're going to have a look at my FAANG plus PIES and see the auto deposit and the auto investing side of things that's happened there, and see how that is doing as well. Hopefully this video does bring you some value and you enjoy it. If that's the case, please hit the like button in the corner over there. If you are brand new here and you haven't seen any of my content before but would like to see more of it, do please hit the subscribe bell over that side, and even tick that notification bell to get notified when I release brand new content just like this. That'd be absolutely fantastic. That being said, let's roll the intro and I'll see you on the other side. Catch you later. What's going on again, guys? Welcome into the video. So just a brief oversight of what's happened since my last portfolio review. I sold my position in BAE at a small profit, and the reason for that is I got rid of it because I can't see BAE systems growing too much, and my trading 212 portfolio now is growth orientated. I can't see BAE growing that much apart from returning to its original share price, which meant there was only about 40 pence in it per share, maybe 50 or so, and the dividends returning. This isn't a dividend growth portfolio, a dividend paying portfolio, income portfolio, whatever you want to call it right now. So I decided to sell that position. It was in the green. I made a little bit of money, and I have had that money, held that money for redeployment elsewhere. I also sold a free share in Under Armour. If you do want a free share to kickstart your trading 212 journey, do look in the portfolio in the YouTube description below. You can click on that link there and get a free share up to £100. That person did. I hope they did better than I did. My Under Armour share was worth £10, but hey, a free £10 is £10 in anybody's book. It was free, and you can do the same as well. I used some money from the BAE sell-off and some money that I still had left over. I've built like a little cash reserve of £70 in the account. So I've got that spare. I've got a deposit coming that's going straight into the pie, but I used some of that money to buy another share in the Forum 2 merger, the Tattooed Chef merger. If you want to see what that's all about, it's a special acquisition company merging two companies. One of them's the Tattooed Chef, and they're bringing vegan food to supermarkets all over the US. And a lot of people think that this company is going to be the next Beyond Meat, which means that the share price being about $10 to $15 a share at the moment. If it does a Beyond Meat, it's going to go up to about $100 a share. So well worth looking into. You could easily make 1,000% on that company if you looked into it. It's still pre-merger at the moment, so you would be buying it under HMCI or Forum 2 merger. Do look into that. The video will be either up there in the recommended videos, or I will post it also in the description below for you to have a look at. It's a really good company to look into. And then we've got £100 automated deposit coming from one of my other investing accounts to reinvest into the FAANG Pie that I've got. I'll show you what that looks like in the app. And then I'm also considering, I'm still holding out my cash reserve of about £66. Virgin Galactic has took a massive hit just lately because Virgin Atlantic and Virgin Australia have both declared bankruptcy, and by name association and the fact that Richard Branson's involved in all three companies, people have exited Virgin Galactic completely over it, and it has caused a big dent in the share price, despite the fact that they just released pictures and they've got a goal of taking passengers hypersonic across Earth, basically another Concorde concept, and they're going to have paying customers on board to do that. I imagine that would be very expensive, but it can get you from like New York to Paris in less than an hour, less than 2 hours, just like Concorde did once upon a time, where you could actually get from London Heathrow to New York technically before you set off because of the way the time zones work, which is a really great thing for business and for wealthy people. that would be a really big time saver for them to do. So I think that's a great avenue for Virgin Galactic to go down. And then they've also got the space tourism side of things as well. And I think their share price has been unfairly dented because they are a separate entity to Virgin Galactic. Virgin Galactic are separate to Virgin Atlantic and Virgin Australia. They just have name orientation, and Richard Branson is a very, very wealthy man, so he's probably not going to allow it to affect Virgin Galactic too much. And the reason that Virgin Atlantic declared bankruptcy is so they can get some protection, but they actually do plan on trying to stay in business. It's just they need to declare that side of things, that they've gone bankrupt, to get the ball rolling in that respect. So I am considering averaging down my Virgin position. That being said, I'm going to get into the app now and we can actually have a look at how the rest of the positions in my growth portfolio are getting on. I'll see you in there. Hello again guys, welcome into the app for my portfolio review. As you can see, current portfolio value is sat at £1,219.96p, £85.17 down or 6.53%, and a total amount invested of £1,305. And in my portfolio up here, a total amount in my account of £1,386.25p. Got £100 dedicated there to the Pie fund, which I'll show you in a little bit, and then £66 of free cash ready to deploy how I want should there be an opportunity arising. So I'm basically going to ignore the companies that are in my pie because I will talk about them separately. So all of these tech companies I'll talk about in a different case. So firstly we have Airbus, 2.03 shares in Airbus at the moment, up 12.42% at £126, and I've made £13.97 on them. Altria is next at 4 shares. I'm down £13.69 on them, or £9.58%. Holding these for the long term until I've definitely made more than £13 in dividends. Then I'm going to sell and redeploy this, as long as it's not made a significant loss, redeploy this money into my FAANG Pie. Altria, since the last review, has actually taken a bit of a hit. I was about 10% up on this company. As we can see, it was up there at nearly $5 a share, and it has came down significantly since then. So I'm £1 down now, or 2.58%. Next up is Babcock, and this company has just not got any better for me right now, even with the good news about the frigate build in Belfast coming on quite nicely with ships for the Royal Navy. I have 10 shares valued at £27.39, but I'm down 30.75% on that and £12. I'm also considering cutting my losses in some of these companies and just deploying the money straight into the FAANG Pie and trying to make that money back that way. Same sort of issue with British Land. Positions worth £40.41p. I'm £18.20 down on it, 31%. Dividends cut from this company. No sign of them returning to the previous share price. Been absolutely walloped by the health crisis. I have averaged down. I think I bought in basically when it was up here. I averaged down a little bit and then the price continued to just tumble away. So it's got away from it. Again, I'm considering just ditching these and just redeploying the money. Lufthansa is suffering the same as every other airline at the moment. I'm 44% down on them, or £10.44. Gotta just be patient with this one, or sell it off and redeploy the money into the FAANG Pie. Do drop a hint or a comment in the description below if you have an opinion on this. And then we have Forum Merger 2, as I mentioned, the tattooed chef merger that's going on, HMCI. The merger hasn't happened yet. There are some exciting products coming to the market. The initial hype happened and it blasted up to $18 a share and then returned to $14. I'm still considering this a buy at the moment. I'm going to amass as much as I can at this price, and then when the merger happens, I'm thinking we could see a really big appreciation. So I'm currently 84p down, or 2.46%. When the merge does happen, I don't have a date for that at the moment. I'm going to continue adding to this one, drip feeding into it bit by bit, and hope for a really big return. My Invesco EQQQ Nasdaq ETF is back into the green as well. So I'm at £210.18 for this one. £4.73 up, or 2.3%, and it tracks the 100 stocks in the Nasdaq 100. Really good ETF, this one. I can't recommend that one enough. Next up is Iron Mountain, 67.68 pence, or for 3 shares, £5.34 down, 7.31%. Had a bit of a recovery in their share price of late over the last week, and I'm very much preparing to sell this one off because I've definitely made that £5 in dividends since I've owned them. So I'll be selling this at no loss, and I can also again redeploy the money into the FAANG Pie. Next up is the iShares Momentum Investing Europe ETF. And as we can see, this one's recovered very nicely since peak health crisis. Invest in companies that have met a certain criteria all across Europe to get into the portfolio, that are growing year on year, and this ETF essentially just tracks them. Same with the MSCI iShares World ETF here. This does exactly the same, but very heavily weighted towards the American economy. So the momentum companies in this are a bit like your Apple, Tesla, Microsoft, those sorts of companies that are growing all the time. Amazon as well, the usual juggernauts that you would expect to see in there. And this one has done exactly the same, a pretty big V-shaped recovery there. Next is Occidental Petroleum. Again, I'm still plucking up the courage to ditch this one. I will do it. I'm £53 out of pocket on them. They have gone up a little bit, but nowhere near where they were and where I bought in. I could do with that spike to happen again that happened on the 7th of June. If that happened, I could sell at a little bit less of a loss, but I'm pretty much resigned to my fate on this one. And I'm starting to think that £37.26 would be better deployed, trying to get my money back in, you guessed it, the FAANG Pie. Royal Caribbean is next. Really like this cruise line company because I bought in somewhere near their bottom. I didn't time the bottom, I just decided to buy in because I knew that they were already heavily depreciated. So I've got 2.35 shares. I've made £25 on them, 36.57%. This one did go up to over 100% money made on at one stage, but I've held because I'm expecting it to make more than this in the longer term, as long as they remain in business, but they are burning through an awful lot of money. So it's quite risky to hold this one, but we do expect eventually the world to be able to go cruising again, and I got in at a particularly good price, so I'm going to hold, and I might even add and round that up to 3 shares over the next couple of weeks or so. Tortoise Acquisition is the next one. Hyliion, this is a really big SPAC stock as well. When it actually becomes Hyliion in a couple of months' time, really good. Expect this to potentially be the next Nikola. I've got 3 shares in it. I'm £2.91 up at the moment. Still rate this is a good solid buy right now, and the position's worth £44. The initial spike happened there, and they went to $31. Then it's retreated down to 19, but the merger hasn't happened yet. But this is a really, really good company. They already have a product that they're bringing to the market, and I can see the price absolutely exploding when the merger actually happens and they list properly on the stock exchange as Hyliion. And then, as mentioned, I've got TUI and Virgin Galactic as my last 2 in this one. Expected travel stocks to start doing a little bit better than they did. Got to be patient with this one. Position of 10 shares is worth £32, £6.94 down, or 17.78%. Gonna have to hold this one out until we get back in the green again, and then I can decide if I want to keep it or sell it. See if I can get a good return on this one. As you can see there, I bought in pretty low, not quite low enough, when we look up to where it was once upon a time, pre-crisis, I'm hoping that we do get back there in 6 months to a year's time, give or take. And last but not least, I already covered Virgin quite a bit. By association with Virgin Atlantic, they've been absolutely hammered. They were actually doing quite well. They've spiked up just nicely with all the excitement around the spaceship that they've got going on hypersonic flight, and then Virgin Atlantic announced it was going for bankruptcy, and then bosh, dropped back down. That's caused me to lose £12.16 or 22% on them, but that by no means does not make them a buy for me. I do have confidence in that company going forward and space tourism and its potential, so I will be keeping tabs on that one and potentially using my free cash to reinvest. Hi again guys, that was the initial review of my non-FAANG Pie stocks there. So a lot of them are in the red because I sold off all the ones that were doing particularly well that weren't growth stocks to get that money over into my FAANG portfolio. So I've only actually got there my worst performing stocks. Apart from Virgin, Galactic and Royal Caribbean and Airbus, I'm keeping hold of them for the long term. But anything else that's not Altria in there or a SPAC is eventually going to get sold and that money moved over into the FAANG Pie. I'm going to take you into the FAANG Pie in a second so we can have a look at that performance and see if I'm on track or not, and see just where we're going forward. So yeah, I'll take you back in there now and we'll have a look at how the FAANG Pie, or FAANG Plus Pie should I say, is doing. Catch you back in there. Hello again guys, welcome back into the app. How are you doing? So here we are looking at my FAANG Plus Pie that's got 11 positions in it, and is actually ahead at the moment, up £3.19 or 1.75%. We still have Auto Invest on, and we can see that I'm still 0.02% towards my £1 million goal. But we got to start somewhere, right? So here are the holdings and my 11 slices of pie. So first up is Facebook, making up £18.50 of my pie. I'm £1.60 up on them, or 9.47%. Next up is Microsoft, making up just under 9% of my pie. £16.10 is my total value in them, and I'm 37p down, or 2.25%. Amazon position is worth £16.70, 23 pence up, or 1.4%. Apple having its storming run at the moment based on the stock split that's going on that's sent the Apple investors into an absolute flurry. I'm 13% up on them, or £2.16. Total position value of £18.63. So yeah, that stock split is something pretty big right now. Big news, but actually fundamentally it's not going to change the value of your shares in the short term or the value of the dividends you get. But long term, you could essentially, if they're trying to reduce the price down to $100 a share again, so more people can invest, and they expect more people to invest and then bump the price back up again. So this is why people are trying to jump in, but that will take some time to do so. But people do expect the share price to get to basically, probably in about 5 years time, end up back where it is now, about $400 a share, and that is a really good way to make your money. So that's why there's a big scramble to get in on Apple stock right now. Next up is, in a nutshell essentially, maybe I should make a video on the stock split, but then the rest of YouTube has anyway, so I think I might have missed the bus on that one. But hey, maybe I'll join the crowd, I don't know. Let me know in the comments below if you want to see an Apple stock split video. Next up is Tesla, a total position value of £18.48, 9 pence down, or 0.48%. You got Alphabet Class A is next, 15.72%, or £15.72, sorry, 75 pence down, or 4.55%. Next is Shopify, £16.46, a penny down, 0.06%, should I say. Salesforce, £16.52, 5p up, or 0.3%. Nvidia has been on a pretty decent run as well, £17.65 total position value, made £1.18 or 7.16%. Adobe Systems at £15.96, 50p out at the moment or 3%. And then last but not least, Netflix in at £15.47, 30 pence down, 1.90%. And that is with the added £100 deposit that will be coming shortly, that's not in there yet, and I'll bring you that in the next update. Hello again guys, welcome back to the real world. That was my FAANG Auto Investing Pie update there then. So progress has been made, largely thanks to Apple going on its storming run. Do let me know below in the comments if you do want to see a stock split video on Apple from myself. I'll make it and get that out for you guys if that's something of interest. I have noticed that nearly every other YouTuber in the world seems to have done a video on that at the moment, and why not? It's a very popular subject, and there is long term an awful lot of money to be made in that. Essentially you're buying one share right now that's going to become 4, but then in 5 years time, if the price returns to where it is now, you could make $1,600 on it in terms of like the American dollar value of it. It's absolutely insane. Really wise decision to lock in the gains that they've had right now, but that's a bit of a digression. I'll make a proper video on that if that's something people want to see. That being said, I hope you've enjoyed the video. If that is the case, do hit the like button in the corner here. And if you haven't subscribed to my channel yet, please do. That would be fantastic. And even hit that notification bell as well to let me know that I've done a good job firstly, but let you know when I release brand new content. That would be absolutely great. This video has been an absolute pleasure to make. I hope you've enjoyed my portfolio review, and I hope to see you in my next investing episode. Catch you there. Bye bye.